Hey guys, welcome back to the channel Market Uncharted. Today for the second part of the video, Commodities Supercycle, Inflation Hedge, where we are going to discuss a little bit about the precious metals, especially because they are really trending now, the conversation, what's happening to gold, what's happening to silver, and others like platinum as well. So let's start, and I hope you like it. Just a brief explanation what are precious metals, basically that are rare and have a high economical value due to various factors including their scarcity, use in industrial processes, and role throughout history as a store of value, especially this case for gold. And today I would like to talk about gold, platinum, and silver, and let's take a look a little bit of what we can do with this. We know, it's a really important for our portfolio diversification to have these as a hedge. No, not only for now for inflation hedge, but in the normal cases, just in case the stock market has a crash or a downtrend, it's important to always have real assets, real money. So in terms of diversification, I always say this is really important to be hedged out on precious metals. Of course, my favorite ones are gold and silver. For gold, you can be invested in shares like, for example, Barrick Gold. You can be invested in ETFs, for example, GLD, which now is kind of important to discuss because we know that GLD can have more paper derivatives than actually physical gold. So that's a discussion that I leave to you, and I highly recommend it to you to do your own research. It's important. For me, I prefer PHIS, which is a Sprott ETF, which actually has physical gold in it. In terms of silver, exactly the same idea. Instead of being invested in SLV, I highly recommend you to do your own research. This is not financial advice in any way, but I'm invested in PSLV or, for example, other shares like First Majestic Silver, which after my own research, this was one of the best companies that I saw out there. Also Fortuna Silver, among others. Again, do your own research. In terms of platinum, and this is really important, I found out two ETFs. Again, I went to the Sprott just because I fully trust those guys and I fully trust that company. So I went to the SPPP, which is an ETF that holds Palladium and Platinum. Those are my choices. We have more here out there. Shout out for Dezo Games as well in Twitter that discuss about ounce through gold, because we can actually request the physical delivery. But again, these are only ideas that out there. Go do your own research, start from here if you want, but this is important for your portfolio diversification. Then it's really important to understand also the movements between the central bank assets and gold. We have been seeing a change, especially in the last decade, of a really high central banks requesting back their golds that were storage in the London vault. And we can see always the same idea: don't follow what they say, follow what they do. And the thing is, the smart money, the huge central banks, are piling up gold on the last few years. And this is important because as the main central banks are recovering their own gold, the price of gold are up as well. And we are right now in a moment that we need to understand what's going on with the inflation, with the potential or not the bubble in the stock market. You can see the values are even higher that was in 2000 with the tech bubble. So it's really important for us, especially the millennials, to hold physical assets. Gold and silver are real money. What you see out there, the euro, the dollar, the pound, etc., those are only paper that we entrust. They have value, but the real value is gold. Gold is here in the earth for 5,000 years, always connected with the reserve value, always connected with value itself. So don't forget about this. It's important also to understand that silver, it's one of the most important precious metals as well, because of its usage in the electronic vehicle sector and other chemical applications as well, became an industrial reserve as well. Then let's talk about a little bit of several factors that make people hoard gold, and not only because of what's going on, but because it's important to have a evaluation of what's going on in the markets. And that's the graph I bring here. While I was doing my own research, I found out a really important and cool company called Crescat Capital, which I follow Otavio Santos in Twitter, and I start seeing his ideas. They invest in junior miners in the gold sector that are now starting to do their mining across the world. The perspective and the value of the companies, they are still junior companies, but really important. And I found out on my own research a few graphs that I bring here today, but shout out to Crest Capital with an amazing job. Having that said, it's important to understand when do we need gold in our side, especially the systemic financial concerns. You can see here in the graph that last time we had the tech bubble, and look at the graph right now, where we at right now in terms of US equity market, little bit above the tech bubble. This is when it's starting to be important to have a store of value, which is gold and silver. Then as an inflation hedge, of course, we have already discussed in the first video, commodities are an inflation hedge, and especially gold and silver, because they have a store of value for us as investors. It's a really important tool for portfolio diversification. Also, when we have concerns about war or political crisis, which is actually what we have been seeing in the world since we had Trump in the US, and not only, but I don't go for politics today. I just say this is important to be aware. Every time there is a macro distress, it's important to hold precious metals. Also, in the graph, I show you what are the precious metals miners versus the global stock. Of course, while the stock market is on all-time highs, people are getting in. The retail investors have a huge appetite for risk. Therefore, the metal miners are in all-time lows. But what we have been seeing here, and this is really important to point out, is that the precious metals miners, especially the juniors, have a really important free cash flow on their balance sheet. It's absolutely amazing. These are liquid companies with a lot of free cash flow. They can invest in the shareholders. They can take care of the shareholders. It's not only First Majestic Silver, which has a really understanding on how to take care of shareholders. We're starting to see out there many mining companies with a really cool free cash flow, and this is important to point out. And this is exactly what I was trying to say. For the first time in 25 years, gold and silver mining companies now trade with a higher free cash flow yield than tech stocks. And this is important because the last few years we are exchanging value for growth. We are investing in companies that are not even profitable. And I'm not going to go there today, but I think we can all understand that, especially in the S&P 500, many companies are non-profitable but have a skyrocket price, and this is a big differential, right? Because now we see again a free cash flow yield positive for the miners, and this is important. Why? Because this is a new era. For the last 25 years, investors look at the miners as a capital destroyer, but now in this new year, we can see as the free cash flow is positive, that's a reserve of value itself as well. Also important, if precious metal stocks were a sector, they would have the cleanest balance sheet of them all. Just a small comparison, again, shout out to Crescat Capital, that is this research with the source of Bloomberg. And you can see here the comparison when you have the high debt sectors as the REITs and the consumer discretionary to the low level of debt where there is the gold and silver miners. So you can understand in terms of value investing how good these companies can actually be. Again, another graph just to understand the gold and silver miners, the peak that we have here, the top 50 miners by market capitalization in the Canadian and the US stock exchange. You can see here the largest repayments of that in history are happening in the last year, and the trend continues in 2021. So again, the same idea, a really important free cash flow available for investors as well. Now, a graph to understand that, and this is important because we are all trying to see the potential super cycle in the commodities, potential breakouts in silver and gold. And the last time we had a really important sweep in silver, the price of silver went up 327%. I'm not saying this is what happening or can happen in the near future. I'm just saying the last time it happened, it was a really important bull cycle. Important also to understand that the silver to money supply ratio, where you can see here that the silver price versus this ratio is really downwards with a peak in 2010. That's the last time that silver went to almost touching the $50 range. And again, there is room to grow on the silver price as well. Important one also, and this is shout out to Silver Chartist to making this available online. This is the gold silver ratio. This is the strength of silver versus the gold. All time lows were 45 to 1, which means silver needed 45 ounces for 1 gold ounce, and the current value is around the 67. So as the all-time low can be around the 25 to 1, the 15 to 1, there is room to grow. This is important. Why? Because the inflation will impact the commodities. I think that's clear by now. Precious metals will be one of the important ones, but silver it gets even more relevant because this is something that, in terms of the supply demand, has been crushed the supply from the last years. In terms of demand, has been increasing a lot, especially because this is a green precious metal used for example, the electric vehicle industries. Companies such as Tesla need a lot of silver. The computer chip companies such as Nvidia, Sony, so many others out there. So the demand is definitely there. The retail demand is definitely there. So there is a room for silver to outperform the gold in a bull run. And now just have a quick comparison between palladium, gold, silver, and platinum, because it seems so far, and this is a graph with the source of FactSet, with an idea that so far platinum already took the lead. It's already taking the lead in the sense of breaking out. And this is important because if you want to invest in this super cycle, you can see that platinum is already taking the lead, but gold, palladium, and silver are pretty much on the same side. And in terms of weekly change, again, showing just pointing out the change in platinum, they already start a bull run. Month to date change, again, just to reinforce that palladium was one of the first raw materials doing it. Platinum already started, but gold and silver are pretty much in the same space. That's why I said in the beginning, and I reinforce now, if you want to invest, these are cool precious metals to take advantage. And in terms of inflation hedge, just two curiosities here between the gold as a reserve value and Bitcoin. People, as of now, are taking more Bitcoin as an inflation hedge more than gold, as a reserve value more than gold. Again, I'm not as drastic as the new type of investors. I think there is room for both. I think 5% of our portfolio can be allocated to each gold and Bitcoin. I see that Bitcoin now is a more trending investment. I'm investing in Bitcoin as well, so I understand the value. I just don't think we should put gold aside just yet. So the ratio between gold and Bitcoin is an all-time low. I think this will recover because I think investors with time will understand that in terms of stress and distress of the financial sector, Bitcoin can suffer as much as the S&P 500. Therefore, they can understand that gold can suffer less and actually outperform after. And I just give you a small comparison. In the last March, when the crash due to the COVID happened, Bitcoin went down 55%, S&P 500 went down 35%, gold went down 25%. That doesn't mean didn't went down. I'm just saying it lose less value than the others. You can also argue that then the recover S&P 500 and Bitcoin duplicate the recover of gold. Of course, I'm just saying this is a tool for diversification of our portfolio. Guys, thank you so much for watching the video. I hope you like it. Don't forget, knowledge is not power. Knowledge is potential power. Execution is everything. And please subscribe our channel for more content. And don't forget, just like the markets, we will not rest.